Can you apply for a mortgage if you don't have an income? Welcome back to Confident Real Estate. I'm your host, JC. Unfortunately, right now, a lot of us are still in some form or another of quarantine due to the COVID-19 pandemic, and that has led to a lot of unemployment and job loss throughout the world, definitely here in the United States. And that raises the question of what do you do if you're in the middle of applying for or about to apply for a mortgage loan when suddenly you find yourself unemployed due to the COVID-19 pandemic? It's a good question. So can you apply for a loan during this coronavirus pandemic if you have lost your job? Well, if you're applying for the loan with a spouse or partner who's part of your household, then certainly you can, so long as that spouse or partner has a steady income of their own. Unfortunately, if you were applying for a mortgage or intending to apply for a mortgage and buy a house based on the dual income of both you and your partner, and suddenly that has been cut by some degree due to the loss of employment of one of you, then you may still qualify for the mortgage, but not at the level you originally planned on. You may not be able to buy the house or qualify to buy the house that you originally planned on buying, because you may now only qualify for a lower amount of financing. If you have more down payment cash to put into the down payment in order to close that gap between what the bank's now willing to lend you versus what they were previously willing to lend you, then that's when you got to make a judgment call as to whether or not you want to go forward, whether or not you want to look for a different home at a lower value, or just sit out and continue renting until you reach the point where you're more stable in your financial standing. So now comes the question of what do you do if you were already approved for your mortgage and you were in the middle of your mortgage application and preparing to close on your loan when you suddenly found yourself unemployed? Well, you might as well tell your lender about it, because most lenders do verify employment prior to closing on the loan. So there's nothing to gain by not coming clean. Unfortunately, if you're applying solo by yourself on the loan, you probably don't qualify anymore, and you're just going to have to sit it out. It's not a great situation. It might be heartbreaking, but it's a lot better than closing on a loan that you don't have the income to pay back and potentially losing your house to foreclosure, destroying your credit, etc. If you're applying for the loan with a spouse or partner and they still have a steady income and employment, then you may still qualify for the loan. If their income's high enough, you'll qualify for the loan you originally intended on, and you can go forward and close. If your spouse's income is still strong, but not at the level the bank wanted to see in order for the loan you were trying to qualify for, then again, you may have to qualify for a slightly lower loan. And either you're going to have to come up with more cash to bridge the gap between what the bank's willing to lend you and what you need, or you're going to have to sit it out and press pause for the moment until you're fully employed once again, hopefully soon. Now, there is something going around called the COVID caveat, and what's that? A lot of people find themselves unemployed at the moment on a temporary basis due to government mandates that have forced their place of employment to close for the time being. Your lender may still be willing to provide you a loan depending on how much you have in savings, and you probably are going to need a letter from your employer that states it is in fact a temporary layoff and they fully intend to hire you back at full employment once the pandemic is over, which is hopefully soon. That said, if you're refinancing your house, you're probably getting a lower rate anyway, so you're lowering your monthly expenses on your mortgage debt service payments from what you currently pay on your mortgage payments. So that's a good thing. If you're in the process of buying a house, however, you have to really evaluate whether or not you want to go forward with getting a mortgage loan on a brand new home that's going to be collateral for that loan if suddenly you find yourself unable to pay that loan back. While you may be expecting to only be unemployed on a temporary basis, it may become permanent, because really, who knows what's happening in the world today. So really evaluate the risks and whether it's worth it. Lastly, if you are forced to hit the pause button on your mortgage application, don't despair. A lot of experts are predicting that mortgage rates are going to remain relatively low for the months ahead and probably hover around the record low rates that we've recently seen. There probably will also be a dip in home prices, as right now the market year over year is showing a general lack of inventory, which creates a seller's market. A lot of people are looking to relocate out of more densely populated and urban areas and suburbs into more rural areas or spread out suburban populations. We actually did a whole video on the pandemic effect in the housing market right now, which you can find by clicking the link above. You should check that out. So again, don't despair if you have to put a hold on your mortgage application at the moment, because you may end up getting an even better deal down the road. I hope you found this video informative. Please remember to hit the like button, and while you're at it, obviously hit subscribe if you haven't already. For those of you who have left us comments, I really appreciate it. For those of you who've asked us some questions and sent me some emails, I will be starting a Q&A that will be on a regular basis, answering some of your comments and questions. So keep sending them. We appreciate it. And we will see you again real soon.